4,000. Gold smashes this key psychological level eventually, hits new record highs. A hot topic driving the market right now, the debasement trade, is at the heart of this rally. So what do you think the debasement trade actually is? Drop your guesses in the comments first before we dive into the technicals, and we will check the answers afterward. Looking at gold's daily chart, the move has been nothing short of perfect. 7 consecutive weeks of gains show clear bullish strength. As I record this, gold just breached the $4,000 mark. If gold can hold above it, it could open the door for further upside, but we can't ignore the defense line below. 3,900 is a critical support. If that breaks, short-term pullback pressure could increase significantly. So, what's the core logic behind gold current strength? It's the debasement trade we just mentioned at the start. Well, in simple terms, investors are playing a big asset shuffle. They are worried that the purchasing power of their US dollar holdings will fall, so they are moving into assets like gold and Bitcoin, which don't rely on any single country's credit. As Wesley mentioned in his video yesterday, the market basically has very little confidence in the dollar right now. And why is this asset shuffle accelerating? 3 main reasons. First, the US government shutdown is the most immediate catalyst. Government closures not only delay key economic data, forcing the Fed to kind of make decisions in the dark, but also highlight the severity of US political gridlock. Traders are thinking, if the government can't even manage itself, how can it manage the world's reserve currency? Second, Fed rate cut expectations are heating up. Soft private employment data has the market almost fully pricing in a rate cut in October, and with around a 90% chance of another cut in December. These expectations weaken the dollar and support gold. And then the long-term trend of de-dollarization, especially China. So to sum it up, ahead lies a fog of monetary uncertainty, and capital choice is rational and simple. If you don't trust it, move it elsewhere. Now, 2 big questions everyone's asking after breaking 4,000, where does gold go, and is it still a good time for me to get in? Well, Morgan Stanley recently suggested gold could challenge 4,900 next year. From the logic of the debasement trade, I still see the path of least resistance as upward. But here are 2 short-term risks to watch. First, the progress of the US government shutdown. If the parties can reach an agreement on the ACA subsidies, reopening the government could temporarily reduce gold's safe haven demand. Also, on November the 5th, the Supreme Court will hear arguments on the legality of tariffs. If the court rules them illegal, it could trigger market shocks, rising concerns over the fiscal deficit, but that could provide a new boost for gold. Finally, what do you think? After breaking 4,000, will gold pause for a breather or keep soaring? Let me know in the comments.